Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1318A, and today's date is June 28th, 2017, and the title of the episode is, The Fed Just Announced the Final Confirmation that the Economy is About to Crash. Now, before I get started, I just want to make an announcement. I just placed an interview on the X22 Report Spotlight YouTube channel with Dr. Paul Craig Roberts. So if you go over to YouTube and you type in X22 Report Spotlight, it'll bring you to the video. Or you can come over to the X22Report.com site, scroll down a little bit, look over to your right-hand side. You'll see the video there. The same thing on News Sentinel. Or if you're on Steemit, you can go over to Steemit and you can view the video there. Let's get into the economic collapse financial news. Well, it's starting to look like retail is getting a lot worse than we thought, where retailers are going to be fighting it out on who's getting the delivery trucks, who's getting the customers, and we see this is already starting to happen. The Cold War between America's two largest retailers just turned hot. Walmart is telling trucking companies that it will no longer do business with them if they continue moving goods for Amazon. Now, this is coming out of Deutsche. These developments, well, they're likely to have significant implications for U.S. transportation companies because in their view, Amazon and Walmart remain two of the largest users of truckload capacity. And I wouldn't be surprised if this starts to spread to other retailers and then it all of a sudden spreads down to the customer level. Because what we're seeing right now is that these companies, they're very desperate. Because what is happening is the discretionary funds that the people have, the jobs that the people used to have, and the high wages that people used to be getting, that is drying up. And it's completely obvious because we can see as we look throughout time, the retail industry continually decline. Even when you look at holiday season and they combined online sales to brick and mortar sales, holiday season sales were absolutely terrible. Actually, Black Friday, Cyber Monday, a complete disaster. Now, of course, they use numbers like, online sales are up by 3 billion. Remember, this online sales, it's only been around for a little while. So if it went from 1 billion to 2 billion, yeah, that sounds fantastic. But the retail industry is hundreds and hundreds of billions of dollars. Online sales is just about 8 to 9% of the overall retail sales. And what we're starting to see is that retailers, they're going to become very, very desperate as we move throughout this year. Now, we could see that the student loan debt problem, well, it's going to get worse. Who is it going to get worse for? Those people who are taking out student loans. Because what did they decide to do? Well, they're going to raise the student loan rates 15%. Now, beginning on July 1st, which is Saturday, interest rates on new student loans will be set higher to 4.45% on a 10-year debt, from 3.76% rate seen this year for undergraduates, and graduate lending rates are also moving north to 6% as of July 1st from the prior year's 5.31%. Now, if you thought it was difficult for these students to pay their student loans before, well, now it's going to be even worse. Actually, they're going to have to modify these loans like crazy because as we can see, the jobs are just not there. The job numbers are completely manipulated. And when people are graduating college, because, they promise them these high-paying jobs, they come out of college and they can't find one, guess what? They can't pay the tens of thousands or hundreds of thousands of these loans back. It's very, very difficult. And we know, because we've been looking into this, most of these individuals are still living with their parents. They can't make enough to move out on their own. And to make matters worse, and we mentioned this in other reports about Illinois, they're having major problems here where they can't meet their budgets. They're running out of funds. And right now, Powerball, well, what they're doing, they're going to suspend it because they're worried about Illinois paying out the winnings. And this is what is happening, and Illinois is going down the tubes. And we can see right now that Illinois, they have about $15 billion in unpaid bills. And of course, these individuals are going to want to be paid before Illinois pays out to the Powerball winners. So it looks like right now that Illinois is having major problems. Actually, it's like the deadbeat state of the United States. And believe me, this is not the only state. Other states are going to experience the same exact thing. When the system starts to come down and it accelerates, we're going to see a lot of states that are going to get into trouble. Look at Puerto Rico right now. They're in a huge amount of problems and troubles, and this is going to spread across the country. Now, as we can see, real estate, well, it's not improving at all. We looked at existing home sales, new home sales, and now we see pending home sales in May. They tumbled by 0.8% month on month, and they were revised even lower for April, down negative 1.7%. This is the third straight monthly drop and second annual decline in pending home sales. Now, the West saw a downturn of about 1.3%, and we can see at this point the index is now 1.7% below a year ago, which marks the second straight annual decline. So again, this point in time during the spring moving into the summer, this is the fantastic time for real estate. This is when they're selling houses like crazy. The flowers are blooming. People want to sell their homes. They're trying to sell it before kids go to school. It's warm to move in. And we're seeing a complete disaster happen right now. Now, total applications, mortgage applications, they fell by 6.2% last week compared to the previous week. Now, the Mortgage Bankers Association adjusted index is now down 17% compared to the same week 1 year ago. Refinancing applications, they are down 9%. And when you really look at this entire situation, we can see that pending home sales, they've really gone nowhere. They've been bouncing around, but they haven't been moving up. They've been like flatlined. Because this is part of the illusion. This is part of the manipulation. If we took away and stripped away this manipulation, the housing market is dead. If we took away all the manipulation in these 20 cities where they pumped up the bubbles, the housing market is completely dead. The values of all these homes, they would completely drop off the face of the earth. That's how bad it is. Now, Trump realizes how bad the system is. He said it before he was even elected president. He said, we're looking at bubbles all over the place. When he was elected president, he said the economy is a complete mess. And what he's doing, what he's trying to do, is he's trying to cut the budget any way he possibly can. Now, this is a very difficult thing to do because those who are in government, in Congress, who are controlled by the corporations, controlled by the central bank, they've been there for a very long time. They don't like cuts. They don't like anything that basically takes away from them. And what we're seeing right now is they're ready to cut spending and impose a hiring freeze in government. This is something that is needed, and it's very difficult to people understand because when the system runs out of currency, where they can't pay for anything and the tax receipts aren't coming in, you need to make cuts. Now, it's not a very popular thing. Think about your own household, where you have income coming in, you have your expenses, and your income is dropped in half. What do you have to do? Or you lose your job and you get a part-time job or 2 part-time jobs and you can't make ends meet. You need to cut things out. Now, the people in your family, you're not really that popular anymore because you got to get rid of Netflix. Maybe you have to get rid of one car. Maybe you have to get rid of cable television or something like that. And people, this is very difficult to do. It's very difficult to do in government, especially when you have all these people who've been in government for a very long time who don't like to see cuts. They want to spend more. This is what they've been doing over a very long period of time. But we're entering this period where certain things need to change for this entire reset that is about to happen. And we just got the confirmation from the Federal Reserve that things are about to change. Now, if there was any confusion why the Fed intends to keep hiking rates, even in the face of negative economic data. And we've been looking at all this data, and it is absolutely awful. It was put to rest over the past 2 days when not one, not two, not three, but 4 Fed speakers, including the 3 most important ones, made it clear that the Fed's only intention at this point is to burst the asset bubble. First, there was San Francisco Fed President John Williams, who said, there seems to be a price to perfection attitude out there, and the stock market rally still seems to be running very much on fumes. Then it was Fed Vice Chairman Stan Fischer's turn, who, while somewhat more diplomatic, delivered the same message. The increase in prices of risky assets in most asset markets over the past 6 months points to a notable uptick in risk appetites. All of this followed the statement by Bill Dudley, who many perceive as the Fed's shadow chairman, who yesterday warned that rates will keep rising as long as financial conditions remain loose. And then, finally, there was Janet Yellen. She was out there, and she said something very interesting. She said that financial institutions are much safer and sounder. She said, will I say there'll never, ever be another financial crisis? No. Probably that would be going too far, but I do think we're much safer, and I hope that it will not be in our lifetime, and I don't believe it will. Now, let's think back for a second. Ben Bernanke, in the year of 2008, told us that the Fed is not forecasting any recession in the near future, that everything is contained, the economy looks strong, everything is fine. Now, in the year of 2008, in October, everything just completely crashed. And that followed into 2009, and this was the worst crash that many of us has ever seen. Now we have Janet Yellen out there, who is telling us that she doesn't think there's going to be any type of financial crisis in our lifetime. Really? If you notice, they always seem to tell us these things right before there is a crash. This is a confirmation, letting everyone know that something bad is about to happen. Because how possibly can she say that we're not going to see anything in our lifetime? I mean, think about this for a second. Yes, can they keep the stock market up? Yeah, they can keep pushing the button. Even if the stock market goes to 50,000, 100,000 points, well, if everyone loses their job, and the majority of the people are on food stamps, the majority of people are on government programs, if the majority of the people can't find jobs, if retail keeps imploding, if GDP continually goes down, but the stock market stays at 50 or 100,000, that's an economic collapse. So they can keep the market up all they want. We know it's fake. We know it's completely manipulated. We know they've been purchasing the tech stock. We know they have a trading desk. We know they manipulate the markets. But the real people, the physical economy, when you look around and you start seeing, okay, that person lost their job, that house is foreclosed, that house is foreclosed, that house is foreclosed, just like we saw in 2008, where for many people, they knew 1, 2, 3 people around them that lost their jobs, that lost their homes, that lost their wealth. This time, it's going to be much worse. Now, they can pretend it's not happening. But when you see for sale signs going up in your neighborhood, and it's a house after house after house, and they're not being sold, and people just leave their homes, you know we have a major problem. Now, the stock market might be at 50,000 points, but at that point, who cares? Actually, it was at 14,000 points back in 2008, right before everything came to a screeching halt. And what do we see? Out in California, people were just leaving their houses in droves, leaving their furniture, leaving their electronics, because they just couldn't afford them. People were foreclosing left and right. The whole thing was falling apart, but the stock market was at 14,000 points. No one noticed. Nobody noticed a thing until the stock market came down. Does that mean the economy wasn't crashing because the stock market didn't crash? No. The economy was crashing all along. People just woke up when the stock market came down, and companies use that as an excuse to say, now we can lay off people. Now we can cut costs because now we have an excuse. So what we're seeing right now, the Fed just confirmed that this entire system is coming down. They just broadcasted the message to let you know that they're not forecasting anything in our lifetimes. There'll be no crash whatsoever. And we know this is completely fake, phony, and false. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.